Hey guys, so it's me, Nicolette Mashile. I'm really excited to be doing this video. I couldn't even wait to actually just get dressed because I had just finished a financial coaching session with one of my clients and something literally popped up in my head while I was doing this coaching session with her. So do remember that none of my videos constitute as financial advice. If you are, however, looking for financial advice, please do speak to somebody who is certified and registered with the FSCA. Today, as I said, I was sitting with my coaching client and we're having a conversation. And one of the things that she said to me is, Nicolette, I have this amount of money in one of the equity trading platforms, and but I'm not seeing it working for me. I have this job that I want to quit because I'm struggling in it. It's taking a toll on my mental health, and I actually just feel like I need to take a break from this job. However, the money that I've put away doesn't seem to be paying me the dividends that I thought I would get, right? So I realized as she was saying this that there's a bit of a disconnect between her understanding of how to invest in the stock market and making money and what it actually looks like. And I actually did an example for her just to explain it. And I said, my sister, the amount of money that she's got is like, I think she's got just below 100,000 Rand. And I said, well, my sister, let me tell you one thing. Well, the 100,000 Rand is how much her portfolio is worth on the stock, the stock platform that she's using, right? So I had to say to her, my sister, I don't think that you are ever going to get enough dividends to be able to live off them right now with that amount of money worth of stock. Because I had to explain that, for every share that you hold in a specific company, the company decides how much dividend they're going to pay per share. So let's say you've got 100 shares and the company decides they're going to be paying 10 cents per share. So how much essentially are you actually going to make? You're going to make 100 shares multiply by 10 cents, right? So we're moving that comma 2 times. So that's actually 10 Rand that you're going to make in dividends. So for you to build a very formidable dividend strategy, one, it's about looking at the companies that do pay dividends quite regularly. Majority of the time, it's companies that have been established for a while. But you also need a good mix of those companies. And a majority of the time, I always say, look at ETFs that track dividend paying companies versus trying to take individual dividend stocks. So instead of taking individual stocks like your Sanlam, your Santam, your Old Mutual, your Standard Bank, rather look at the ETF or the index, which is the ETF that tracks your dividend paying stocks. Because at least if Standard Bank, for instance, has a big meeting and the board of directors decide they're not going to be paying out any dividends this year, at least when you're in an ETF, the other stocks will actually carry you and pick you up. So I think that's one way of looking at it. And then I also realized that she is actually an income investor. And we've spoken a little bit about what income investing is. Income investing is basically when you invest in a specific asset, and while you are invested, you want that asset to actually pay you out an income every single month. And when I asked her, is this who you are? She said, yes, I want something like 5,000 every single month from my investment. And I was like, well, 100,000 Rands worth of stock, it's not necessarily going to give you 5,000 Rand. So then I realized something, and I had like a light bulb moment come on. And I realized that many of our people invest first, and then after investing, they want to kind of determine what the objectives of it. And that's why I say it's important before you invest to look at what is the outcome that you want. Because if you look at the stock market, it takes long for the stock market, for any stock, any share price of any company to really actualize to a point where you are going to grow your portfolio. And I'll give you an example. And this is the example I gave her. In 2002, Capitec listed at 2.75 Rand a share. If you bought 100 shares, you would have paid 275. But for your portfolio to grow, like yesterday I was checking the stock price of Capitec. It's currently sitting at 111, right? So that's a big jump, but that's over 20 years, guys. So 2002 to 2022, that's 20 years. So that's how long it's taken for the Capitec share to grow to a point where your 275 becomes 211,000 Rand. 210 or 211,000 Rand. I have not done the full mathematics. It's an amazing growth in your stock portfolio. But at the same time, it's taken over 20 years. That shows you how much time you need when you are investing in the stock market. Yes, the stock market for years has shown that over the long term, it delivers the best returns. But you can't want the stock market to be the same investment that gives you an income every single month. It doesn't work that way, right? So it's important to look at the outcomes. Yes, I know we've been pushing for people to invest in the stock market, But if you're the type, you must also ask yourself the type of investor that you are, your financial situations, how quickly do you need money from this investment that you are putting away? So you've got to look at the outcome and say, what do I want to get out of this? If you're an income investor, I need 5,000 Rand from this. Can I put in the stock market? No. Because most of us, we encourage people that if you're making some sort of gains in the stock market, reinvest it and buy more shares in that company, right? So the stock market is out. If you want to invest and you want to earn 5,000 Rand, you can do it via dividends, but you need to put a whole lot more money and your strategy needs to be so savvy, right? I can tell you even with somebody with a stock portfolio of maybe 500,000 might not make dividends of 5,000 every single month. So it's about looking really at what is the best financial investment vehicle where you can put your money in there that's going to give you this 5,000 Rand that you are projecting. So the stock market won't work. Can you put it into real estate? Well, can you actually find a real estate house that you can buy at 100,000? Yes, maybe you may find it. But will you get a rental of 5,000 Rand? Minus, remember, all of the operating costs that you need to pay. So things like levies, things like operational costs, like your city, your municipal rates, taxes, and all of that. Will you actually get a net of 5,000 Rand? It may just also be impossible, right? Bond market, definitely not, right? We don't even have to go into the bond market as to why it's definitely not. But you can look at something like entrepreneurship. So I was saying to her, if you take, for instance, out of that 100,000 Rand, you take 10,000 Rand, and you buy tracksuits, for instance, and you want to sell these tracksuits at a cost. You buy 100 tracksuits at, let's say, 100 Rand for a tracksuit, right? You're paying 10,000 Rand. You sell these things at 250, so you make 25,000 profit. You minus your costs plus the amount that you initially invested, which is 10,000. So let's say your costs are 5,000 and the initial is the 10,000. So 15,000 gets minus. You've made 10,000 Rand. Obviously, it comes with its risks. But now you're starting to see that if you invest in trading clothes, you may be able to get this desired outcome that you want. And her desired outcome, for instance, in this example, would have been the 5,000 Rand every single month, right? The other example would be putting your car in, buying a car for like e-hailing. So let's say you go into either Bolt or you go into an Uber, right? So let's use Bolt because Uber has quite a big restrictions in terms of the types of cars. So let's just make an example. Let's not use Bolt or Uber. An e-hailing service, you buy a car at maybe 100,000 or 120,000. You put down a deposit of 50,000 Rand. So let's say 120, put down a deposit of 50,000 Rand from the cash that you do have. You need to raise 70,000 in a car loan. Go to the bank, you've got good credit, the bank gives you the 70,000. You negotiate good interest rates again because you've got good credit. The bank gives it to you at favorable interest rates and terms and conditions on your credit agreement. Now you know that, let's say every month your installment is like 1,000 Rand because you borrowed a small amount of money. So let's make it maybe 1,500. Then obviously you need to get insurance for that car. So maybe your insurance is 500. So now you to run this car is 5,000. Your car needs petrol because if it's an e-hailing, it definitely needs petrol. So let's add an additional 2,000 for petrol. So that's now 4,000 Rand, right? This is just operation cost on having this car. So it's already how much? 4,000. Then you need to get a driver. Let's say you pay the driver another 2,000. That's 6,000. So for you to still make your 5,000, this e-hailing service car needs to make you 11,000 Rand every single month. So you can withdraw the 5,000 that you want and you can pay for the installment, insurance, petrol, and the driver. So that's why we go to 11,000. But you've obviously got to do your research first and stress test the idea and ask other e-hailing service providers, can I potentially actually make 11,000 Rand? So that's why I say it's important that we don't do this thing of not giving our money KPIs or our investment vehicles KPIs before we actually choose what type of investment vehicle we're going to put that money in. Because if you don't give it KPIs and then When you've already put your money in and invested in a specific asset or financial instrument, then you come back after and you're like, actually, I want this money to make 10,000. How will it make 10,000 if the environment you have put it in is actually not conducive? So think about it like driving to a certain destination. You don't actually know the destination you're going to, right? You know you want to get there in an hour, but you don't have the idea of where the destination is. Then they show you a bunch of cars and you pick a car. But that car, it's not possible to get to that destination or that mode of transport. Let's say, for instance, let me put the example in a better manner. So let's say you know you need to get somewhere, right? So you've got in your head that you need to go. You've got the cars are in front of you. The modes of transport are put in front of you. Now, once you've chosen the mode of transport, you then say, oh, I actually need to get there in an hour, but now the destination is Nelspruit. But you didn't choose a flight. You chose a car. And a car can only take, at the worst case scenario, takes you 3 hours to drive from Joburg to Nelspruit. Now you complain about the car. But the car wasn't the problem. The problem was that you did not determine where you were going in the first place so that guides you in choosing the right mode of transport. So it's important to have your first, before you even start investing, what are the outcomes that I actually want? And if these are the outcomes that I want, the car that I'm choosing, the investment vehicle I'm choosing, is it the right one to give me these outcomes? So that's how you've got to start thinking about how you're actually going to choose the types of investments that you want to make. I hope that this has been eye-opening for you because it was an epiphany for me this morning. But yeah, I hope to see you guys on the next video. It's been absolutely fantastic having a chat with you guys. See you on the next one. Mwah.